Good morning, traders. It is 8:03 a.m. Chicago time on the 28th of September, 2022. It is Wednesday, hump day, last Wednesday of this September. Thanks for joining me. This is episode number 2324. 2324. A lot of episodes, 10 years of episodes or so. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, pretty interesting market overnight. We actually sold off a fair amount last night, almost 50 points at the low from prior settlement. And now we're up 12 points. We're mixed this morning overall, just hanging out in the yellow zone. And so we're coming into this market where we are near swing lows, more recent lows. We are under some significant levels, and we remain in this area. No real rallies that are sustained. Crude is making a pop higher. Crude has been strong all along. However, although it broke away last week, late last week, and left a gap behind, but crude overall has been pretty resistant to a trend down. It's been imbalanced now for a few days. No earnings at this point to talk about. European banks and insurance stocks struggling this morning. Asia was deeply red, 3 point something percent in the Hang Seng. Nothing new across the news feeds, mostly recycled headlines, and overall the sentiment is very negative on the short and intermediate range. Very negative. And then the biggest news really is this interesting, very Putin-esque, that's a new word that we're going to add to the Webster Dictionary. Very Putin-esque approach to ending this war, which is to basically say the areas that I'm controlling, yep, they're going to hold a vote. Yep, it's democratic. Yep, the vote's 94% pro-Russia. And so we're going to get this passed through our parliament. These areas will be considered as Russia, and any attacks against them would be attack against the motherland, and therefore retaliation would be would use anything, including tactical nuclear strikes. So you gotta get out of this problem one way or another. So the territory represents about 15% of Ukraine's landmass, and just seems like this is the prize that Putin wants to claim for the lives that have been lost and the money that's been spent and wasted and the revenue that's been lost. So that's the biggest thing right now. It's not really impacting the markets other than to add to the overall negativity, jitter, anxiety, and so on. Big moves happening in the treasury markets still, and that really remains to be monitored. Looking at the calendar overall, we had this morning, we did have the GfK consumer confidence out of Germany for October. Came in at negative 42.5, was expected at negative 37.8. Seems to be accelerating to the downside. The prior's 36.8. So again, the prior's 36.8 negative. Forecast was negative 37.8, so another negative point. But the actual came in at negative 42.5, which is about 6 points below where it was last time. Consumer confidence out of France for September came in at 79, was expected at 80. President Lagarde came out and spoke, and then this morning at 8:30 Eastern, we had U.S. goods trades. Goods trade balance advanced for August came in at a deficit of 87.3 versus 85, deficit of 85 expected. Wholesale inventories came in at higher 1.3 versus 0.3, higher inventories. Retail inventories much higher, 0.6 versus 0.1. Fed's Bostic at 8:35, and then we're waiting for pending home sales for August. At 10 o'clock, the expectation is a drop of 0.5%, and home sales year on year expecting a drop of, get this, 23%. year on year pending home sales for August. The prior was 19.9 drop. We get Fed's Bullard, and this is exactly what we talked about on Monday. Lots and lots and lots of Fed speakers at this point. They really are trying to talk themselves through this soft landing scenario. And that's where we stand this morning. We have inventories at 10:30, Fed's Bowman at 11, Fed's Evans at 2, and BOE's Dingra at 2 p.m. So you have the Fed parade, which is always expected after the Fed announcement, and it's in full effect now. So that's what's on deck. Looking at the S&P, the S&P really, despite the fact that we have some pretty outstanding range, 68 points, it's not as huge as it was when I said outstanding during the pandemic, but 68 points is much higher than two standard deviation, much higher than the first standard deviation. It's approaching two standard deviations, in fact, for the overnight session. So the range is pretty wide. In addition to that, the volume is extremely high, greater than two standard deviations for overnight volume over the last 252 days. 680,000 contracts. That's a very, very active volume for the middle of the week. No rollover. So this gets my attention immediately because it tells me that there's a lot of money being moved in and out of the S&P 500 and some heavy hedging going on potentially. So I'm expecting that to carry forward into the session. So we have very wide range, really very wide range, and very heavy volume coming into today's session. This, again, I've been looking for a capitulation. It was expected yesterday, but yesterday failed to maintain. This is, let me turn this off. This is what we talked about yesterday. It looked like, with the S&P pulling back and the point of control being near the high of the range, with us being above a VWAP and so on, I was looking for the market to pull back to 3,700 or so, but I was expecting the 30 to be taken out to end the one-time framing down. And if the 30 was to be taken out, the expectation was for the market to start pushing towards the mid-century figure at 3750. So it's 30, 35. Then we have, then we're in the gap. The gap mid is about 3750. And so the expectation is that we would push to 3750. Here's what actually happened yesterday. Well, let's look at the active chart because it's easier to see. Here's yesterday's action. Lots of rotations yesterday on the tick by 8. So here's the open. Here's the open. We immediately push up. Let me change the pen color here. We immediately push up off the open. I was expecting it to pull back to 3,700, 3,690 being key, if you recall from the prior chart. Right there, the 90, right? So let's go back, 3690, and we push right to 3690. We ended up taking out the 33 without any pullback before it. Expected a little more chop, a bit of a pullback, didn't do that. Pushed through the 30, and it got to 33. Didn't challenge the 35, couldn't hold the 33, and it seemed like every time the market gets above the surface, it's whack-a-mole, gets smacked down with a hammer, and it came back down, and it set up this beauty of a trade right here. And I know you have to squint to see it, but to me, this is pretty much my bread and butter. Very solid trade here at 18 with a pullback to the mid and VWAP for RTH after impulsing down against price action structure, the price action low from above at 18, set up the short for continuation lower and got us into the 3705, 3700. We got to 3690 on the nose pretty much. It did push through a little bit, 86 and a quarter, but just a beautiful trade there. It walks itself back, and then now we have a cross between the full session and RTH VWAP and the RTH mid for another opportunity against a well-defined, so this is a well-defined zipper risk there. This is another just a piece of art yesterday in terms of trading. It did not get any continuation though. It ended up holding this zone here. I was actually, for those who are at Convergent and were watching the Mavens channel where I posted this trade, I was actually long in here and took a ton of heat at 3,700 and some change, 3,700 and a half or 3,700.75. Took a lot of heat back and forth, and it finally breaks through and it goes into this sandwich. So I ended up getting long into that ceiling there, and the ceiling held, and I ended up having to scratch the balance. But overall, some really good structure. Here's another good structure for those of you who are always wondering what setups I trade. I'm very vocal and generally open about what I look at. I've been for a long time. It hasn't changed. We have a drop, which I didn't anticipate. We have a very strong impulse, big rotation, as you see here down below, 34-point rotation, and we pull back to what is just a beautiful, beautifully made initial balance low, that low at the 86 and a quarter. We come back up and we test it from below right there for continuation. So the trade here is the impulse down, look for a pullback. So there's risk to be taken here. There's risk to be taken in here somewhere. There's a collision plus some structure. So that would be the secondary area to get short, looking for a continuation down. And what are we aiming for with the continuation down on this trade? We're aiming for an internal gap to settle. And so we're looking for 72 as the target, 71.72, I think 71 or 70.50, I don't remember, was the settlement price. And we're looking for that settlement price. And that's where our main target is. The balance is just a runner. Risk off, the payoff is at the prior settle. The stop is about 3.5 points. Ranges and harmonic rotations have expanded. I talked about this on Monday, that our rotations have expanded. So now I need to expand my stop. I don't use ATRs or anything like that because they're looking back 20 days and so on. And they're lagging in the way they move. They're just looking at the close. They're looking at closes. So if you look at ATR, it's looking for average true range, and it's looking at it's just lagging too much. So I use rotations on a market profile chart or on a statistical basis, and the stop is 3.5 points. Currently, 3.5 points. Look for the continuation down into the settlement. You stay in the trade as long as it doesn't have a big counter rotation. So you can see here the down rotations are large. I just collapse this. I'll go back. The down rotations are large. So this is the trade. This is the one that generates the trade. This is the signal. So this is the counter rotation for the signal. But you can see that the down rotations are large relative to the counter rotations. And as long as that continues, we stay in the trade until we get a 13-point counter rotation, which is the low. And at that point, you're starting to look for an exit. Pretty interesting, pretty good structure. So if you struggled yesterday and you were down yesterday and you lost a bunch of money, I feel for you. Everybody trades in a different time frame and a different style, but yesterday's action was very much within the bounds of the best performance for me. when we have short time frames being respected and the short to intermediate term traders in control, this creates opportunities in the way I look at the market because I'm a day trader, right? So continues on. It finishes right with the point of control at the low. What we ended up with yesterday, we have to describe the day. We ended up with a price discovery day, an imbalance day down. There was no value yesterday. The point of control at the lower quartile of the range. And since the point of control is at the lower quartile of the range, we closed below the IB. We're looking for the next session to continue lower. All that's saying is price is being accepted lower. And if price is being accepted lower and we finish near the low end, it means that we have not really found aggressive buyers. We're really pushing prices down. I mean, talk about yields, energy, war, and so on. The fact is the market is trading and accepting lower prices, and that's what really matters. That's what everything, that's the atom of our soup that we're trading here. When you boil it down to its most basic building block, to its basic atom, we're looking at how price is being accepted or rejected. We use volume to figure out acceptance and rejection, and we use price as the indicator of sentiment. Okay, so the sentiment's pretty negative. We expect the market to test lower, and it did. And then this morning, we see there's respect for short-term levels here. So we're likely to have a very similar day to yesterday. So trade structure, trade support, resistance, and be mindful of what short-term levels or day type levels are ahead of us. And that's what we're looking at. Okay. So what is going on today? Balanced overnight profile, the point of control down at 36 or so. And we're trading well above that. The mid VWAP are on top of each other. They are higher than the point of control. Again, the profile is balanced. There's some distance to the current price of 36.69 to 36.47, the mid and VWAP. There's even more distance down to the overnight point of control. So there's some separation, which will likely lead to pretty strong moves on the open. Another day where we need to kind of stay put for the first 15 minutes or so. It's advisable to wait for the market to set up. Let the market on open orders go in, let it flush or spike or whatever, then start looking at, it's kind of like trading a number, then start looking at who is actually accomplishing gains in terms of price. Is it the sellers? Is it the buyers? And then take positions from that perspective, leaning on predefined price maps, predefined areas with predefined risk. And that's trading in a nutshell. I can complicate it for you, but it's really that simple. But it's not easy. It's not easy. To see it in real time on the hard right edge is not easy. So you can see that there's actually some those big red dots here, a very clear order flow example. Look at the size that's coming through right here on the tape. This is why I keep the tape on all my charts. You look to the right, you see 696 printed. You see 300 printed, 200 printed, 500 printed, 100, 100. But what's price doing? Price is moving down, but for that much volume, it is really not flushing. And what that means is in order for those prices to print, what is actually happening? So we can look at that and say, oh my God, the tape is red. There's a lot of volume hitting the tape. Boom, 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 boom. But the problem with that assessment is between 57, so the lowest print there is 57.33 on a VWAP basis, 57.33. From about 67 to 57, it's hitting, and it's stalling out, and it's bouncing back up, and now you see these buyers stepping in. What does that say? It's saying that there's an aggressive seller, but that's not the piece that's important. What's important is that the aggressive sellers being absorbed. Bullish. The action is bullish, believe it or not. It's the passive side that controls the auction going forward. It's the aggressive side that controls the auction now. You can quote me on that. So that's what it looks like normally. So to me, this is likely to try to push the overnight stat by taking out 3681 early. And then we have to concern ourselves with what's above. What's above is the 33, which broke the one-time framing down yesterday with a range extension up. So the one-time framing is neutral. And this is likely to start climbing back up to that 90 level from yesterday. Remember, 80. We had that trade at the IB low yesterday at 86. We are likely to test that level next. And if we clear that, then we are likely to push relatively quickly to the point of control in the area, which is at 08. So 3710 is marked as the point of control in this region. But the 0810 is likely to be tested today. So what I'm expecting here or anticipating is it's likely to squeeze through the 81 and it's likely to push to 90. And there's a potential for a double O century figure, the 3700, 0810, and then sellers likely to push this back. So very hard to tell. We're in a swing low, so I can draw a bunch of lines on here, but it doesn't mean anything. But that's the narrative that I see. Does that mean I'm bullish and I'm going to blindly buy? No. I'm looking for how it tests down. We just had a nice test down. What I talked about a minute ago about the order flow is an example of how I'm using order flow to understand what the market's intent really is. And the order flow just now, if I had a setup long, that order flow would get me long in a trade as we speak. And I'm looking for that sort of action on the open. I'm looking for it to just try to hit the bids and try to push. And then price is refusing to move. That sets up a quick relief short squeeze in this situation to get me to cover risk. And as soon as risk is covered, I'm looking for the next wave to start coming in and pushing. And if they don't, then I'm out. If they do, then you bank some profits, hopefully, and then start looking at your price map for key targets 90, 08, 90, 00, 08, 10. And if we take the 08, 10, we're back at the 30, 33, and then we're back at the 50. If we don't, and we start rolling over, then we're looking again at the 3650 and follow your stock zones, the 3650, the low of yesterday's session, which is about 25, and the 13, the overnight low, and then the double O at 3600, and we're in the 3500 handle, century handle again. So very, very clear to me what it's trying to do here. These turns create some pretty decent opportunities. Just be focused, know your risk, and obey it, respect it, and be disciplined. I'll leave you with those thoughts. A quick announcement here. Today, I was supposed to be on a show with Anthony Crudele, but Hurricane Ian is disrupting that. And so the show today and the giveaway have been pushed back a week. So you can still go to edgeclear.com/deli and throw your name in there for the giveaway for this MSI laptop, Katana laptop. We're pushing a week back because of the hurricane. It's too risky to hold the show since Anthony's based out of Florida, and we'll do this next week. So if you're expecting to be on the show, to watch the show today, it is pushed back a week to October 5th at 12 p.m. Just wanted you to know. I'll catch you soon. Take care.